Shares of UPS falling this morning after seeing profit and revenue miss forecasts. Bad weather playing a part in the company's results. Joining us exclusively on the quarter is UPS Chairman and CEO David Abney. David, great to speak with you this morning. Thanks for joining us.
Thank you, Morgan.
So in terms of the quarter, as we just mentioned, a big weather impact, but also the stock seems to be trading lower in part because the second quarter guidance is below expectations. Walk us through what you're seeing so far this year in terms of business activity and your expectations as the rest of 2019 unfolds.
I certainly will. And the first quarter, it was a dynamic environment. Weather, of course, did play a big part. We called out weather as a 7-cent per share a negative effect. And then there were also trade pressures. I think what's important to look at is our performance for that first quarter. We offset almost the entire effect of weather through good execution. If you look at our air volume in the U.S., it was a 7% increase over the year before. If you look at our ground yield, it was up 2.7%. And even with the weather, we were actually able to bend the cost curve down. And then in our international business, with the trade pressures that you see, whether it's Brexit or U.S.-China, we were still able to have a record first quarter. And when you look at revenue, the top line, that was affected more by currency. And so if you make it currency neutral, we had good top line performance, we had good bottom line. But what gives me confidence is, well, first, you can tell we maintained our guidance for the year. And our transformation initiatives and our strategy and the ability to execute. And we're not going to have winter storms the rest of the year, so we feel much more comfortable about that. But we're going to continue to execute, and we'll be fine for the rest of the year.
Yeah, in terms of the global economy, I mean, given the fact that UPS moves so many different types of goods across the globe, a lot of focus on global economic growth, particularly in places like China and Europe right now. I mean, just look at 3M's results this morning and some of the comments coming out of that other industrial bellwether. How would you categorize it, both internationally and here in the U.S.?
On any given day, we move 3% of the world's economy, and we move about 6% of the U.S. And what we're seeing, I'll start with the U.S., is still good growth. It's not quite as high as what we've seen in the past year, but it's still driven by the consumer, still driven by inventory replenishment. At the same time, we do see that manufacturing has slowed down a little bit, and industrial production is forecast the second half of the year to slow up. So a little mix. From the global side, still growth, just not as high as what we've seen before. Europe is being slowed a little bit by manufacturing decreasing and, of course, by Brexit concerns. And China, even though it's not growing quite as fast as maybe previous years, is still showing solid growth. Maybe not quite as high to the U.S., but certainly higher in other parts of the world. So we're still bullish on our international business and our ability to compete.
Interesting prognosis there. I would imagine you're planning the business based on trade flows for the rest of the year. Do you expect that we're going to see a trade agreement between the U.S. and China?
You know, we are encouraged by what we're seeing so far, what we're hearing. We really believe that both countries need to find a way to resolve the issues. We do believe that U.S. exporters need to have greater access to the Chinese market. And so we're hopeful, but the signs we're hearing, we think that there's a deal to be made. We would just encourage the leaders to find that deal.
David, you mentioned you're maintaining guidance for the year, and yet Wall Street seems to be taking a wait-and-see approach. What gives you the confidence that you can meet that guidance, again, given that the stock price has shaved about 8% off of your market cap?
The confidence that I have is based on our strategic imperatives. We know that we're going to focus on SMBs. We're going to focus on global growth markets, on healthcare, and on e-commerce. And we saw good, solid gains the first quarter. We came very close to offsetting some of the challenges that we saw. And we see momentum. We are accelerating our implementation of technology. This year, for the second quarter, we're going to implement 30% of our new capacity for the year. Last year, we didn't implement any the first 6 months of the year. And we will get the benefits of that increased productivity. We're adding more technology. We're focusing on the small business owner. And we feel comfortable that we will maintain and reinforce that guidance.
Now, David, on the call, you were also, and this happens every quarter, but you were also asked about the impact of Amazon building out its own transportation and logistics, whether volumes had been impacted at UPS, and you said you haven't seen that. But you just mentioned the growth and the focus on small and medium businesses, the tech platforms you're building out there, some of the physical fulfillment centers. I can't help but think that the focus there on diversifying into this revenue stream beyond some of your largest, maybe lower margin customers like Amazon is exactly for that point, to move beyond some of the more traditional, bigger e-commerce customers. Am I right to think that?
Yes, Morgan. In fact, we called out last quarter that we're going to improve the revenue quality and that we were going to focus more on smaller customers and less on maybe some of the largest e-commerce providers. So really what our customers are telling us is they want alternatives and they want to be able to compete with these larger companies. So we are helping them by building platforms to really punch further than their weight. And to give you just a couple of examples, e-fulfillment, which the small business customers can connect to 21 different marketplaces, and UPS will take care of all the logistics, all the warehousing, and all of the shipping. And then Where2Go, which is a new business that we started, is really a broker that matches available warehousing throughout the country with the needs of our customers. And in both of these alternatives, we can give them 2-day service throughout the nation, which is what many of the large e-tailers can do. So helping them to be competitive to these larger concerns.